Now, again, I'm looking for a bottom. It can form with the divergence on the 60-minute charts, and we could still go a little bit lower. The bullish inside day, the gap higher we got today, it could be confirmed. Talking about the bottoming process, either one of those scenarios are in play right now. In the daily time frame, we got the bullish inside day. Possible divergences could still form. Hourly chart. The VIX was down 13% today. The VIX was up 12.5% on Friday. It predicted an 85% chance that we would have an update on the S&P in the next two sessions. We got it today. VIX got that right. And again, when it starts going parabolic, like over here, sometimes you got to throw those predictions out. They don't always work, but most of the time, 85% of the time, get a move of greater than 10% on the VIX. It does correctly forecast a move, a short-term move on the S&P. Right now, Friday we had that 12.5% move higher on the VIX, and it predicted a bounce bottom on the S&P within two sessions. We got the bounce. Maybe it's a bottom if the bullish inside day plays out. But then now today we're down 13% after getting a candle of indecision. Still above the moving averages, and the 50 still above the 200. We're still above the 10 and 20, but we're down 13%. The VIX is predicting a down day on the S&P 500 in the next two trading sessions, either Tuesday or Wednesday. 85% chance it happens, 15% chance it doesn't. The last signal was correct. It's had some good signals. Not all of them have played out in recent days, but other than that, the VIX is correct. Right now it's predicting that we'll have a down day on the S&P. Now, if we get confirmation to the inside day, then maybe we get a big rally and then get a down day. We mark a bottom. Another scenario would be that we form divergences on the 60-minute charts and still go lower and try to bottom out. So regardless, the VIX is predicting a down day either Tuesday or Wednesday. What happens with that? And short-term predictions based on probability with historical data. Okay, look to the VIX every day. Go, the VIX says we're going to be up or down or up or down. I'm not really interested in short-term price fluctuations. Looking at the overall swing moves. Now, again, we're in a downswing. We'll probably move back to an upswing shortly. Do pay attention to the VIX. They give us clues to a bottoming process, topping process. Again, historically, it has been pretty amazing. I'm not trying to day trade the VIX. So if you think that's what I'm saying, that's not what I'm saying. Saying we might further downside, just as the VIX on Friday predicted a bounce for the market. It's historical data. It's not meant to be day traded upon. You know, I'm looking at the swing moves, not the short-term daily price fluctuation, but the bigger swing move. Now again, 4-hour charts. So bearish, I'll be watching to see if signals turn back to bullish. But it's a bullish inside day. Go down a little bit further and try to form divergences on the intraday charts. This is the S&P 4-hour chart and NASDAQ 4-hour chart. Same thing. We're seeing rally, but it's not flipping signals yet. Watching to see if it does later in the week. The bullish scenario with the bullish inside day on the daily chart, or whether we go down a little bit further and we try to form some divergences. We'll be watching to see, try to carve out a bottom of this week, whether that's sooner or later. And again, I'll be talking about in this video two scenarios: the bullish inside day scenario where Friday's low can hold, or where bullish divergences are still forming on the intraday charts. NASDAQ 4-hour chart here. Over the weekend, I talked about valuations, showing that the market is at extremes. And again, at the 10 years going forward, the next decade, returns are going to be very low or negative. And we know that from high valuations. I talked about the employment rate predicting a recession last Thursday, at the uninversion of the yield curve on an intraday basis. Friday, we closed officially uninverting the yield curve. The steepening of the yield curve. This is leading to a recession in the next 3 to 6 months or so. Before we get that recession, we're going to have the Fed pivot, which again, I told you I believe that was going to be September 18th, a week and a half from now. It will likely rally, find a bottom and rally into, surrounding the Fed pivot, and it might go a few weeks, maybe into late September or on into early October. We try to find a short-term bottom. But again, regardless, that will complete the narrative. Oh, we're now yield curve normalize, going back to normal, getting the steepening of the yield curve. That's when you have the market begin to price in the recession. The Fed starts doing their rate cutting campaign, try to ease the pain of recession. But they know recession is coming. It's going to be like 2020. Markets are going to rally till 2027. See, the problem with Fed right now is they're going to start lowering rates, but they can't drop them back to nothing did before in 2020 pandemic, because again we now have inflation. Inflation will rear its ugly head, a repeat performance of what we saw in the 1970s, where it's over, and then they started lowering rates aggressively, and inflation came roaring back. That is the risk. Fed can't do that. People don't understand. Cuts, they've already been priced into the market. The market's in a topping process right now. But again, I spent a lot of time thinking about the trend lines over the weekend. I talked about the valuation showing that, with the Shiller P ratio and profit indicator. I get the inflation data this week, but I talked about these things. But again, these things are reliable indicators that are predicting that a recession is about to happen. These experts coming on the financial channels telling us, oh, no, that's no soft landing out of the Fed. Now you got Yellen out there. Treasury Secretary Janet Yellen's now repeating the propaganda. We're going to have this soft landing. This is the same stuff the Fed has been saying. Look, experts go on there and tell us how we're going to have this soft landing. Retail investors drink the Kool-Aid. Institutions sell into the rally. That over and over with the NASDAQ. They're selling into the rallies. This is propaganda. We are not going to have a soft landing. We are going to have recession. I'll believe the inverted yield curve, these experts or government officials, any day of the week. Inverted yield curve has a proven track record. Warning, the steepening of the yield curve is warning that the recession is right around the corner, just like the Psalm rule. Again, the Psalm rule has been right for decades. What does Powell say about about the Psalm rule? Well, he dismissed it. These people know, Powell knows, Ellen knows, they all know we're going to have a recession. At some point, we're going to likely see a bottom, and that could be this week, and see a rally surrounding the Fed pivot to complete the topping process. And then I think you're going to get a much, much bigger sell-off with the reversal once that happens. But we have the yield curve uninverting. Talking points are, things are normalizing now. And we're going to have the soft landing, and that's just a bunch of nonsense. Yield curve in 2000, we had pretty peaked. We got a lower high, and with that lower high, began to see the yield curve steepen. Gave us the first sell-off after the lower high, and then when it uninverted, again, a much bigger sell-off. It unfolds in different ways. You look at the S&P 500, again, the top there in 2000, we peaked. We went up, we made a lower high, coming very close to that peak. NASDAQ did not. NASDAQ ended up dropping 82%. S&P went back up and tested this high, and then ended up dropping by about 50, almost 52%, 51%, something like that. Here, by the time we got the pivot in 2001, we had the uninversion of the yield curve just before it. The market had already dropped nearly 20%. We got a rebound for about 3.5 weeks with the Fed pivot there, and then we saw the bottom fall out of the stock market after that, and I've cut it off here, but I mean, we can go forward to 2002 where it just kept dropping. The yield curve is predicting that we're going to have a recession, and that's likely going to be in the next 3 to 6 months. The market will begin to price in the recession. Bitcoin will begin to price in the recession. The Fed will begin to cut again, trying to ease the pain of recession. The problem is they have to balance that with the inflation first. Eventually, the recession will fix with the inflation problem. Needs a recession to put the final nail in the coffin for the inflation. All of this is warning, hey, we're about to move into a bear market. We're probably going to move to a new high and get a topping process in all likelihood. Here in 2000, we saw the sell-off ahead, the Fed pivot. In 2007, as I've talked about, here they both are side by side. Here's what we were just looking at. We had the sell-off, 19.5% to be exact, and then we had this 3.5 week bounce for the pivot, and then again, the bottom fell out of the stock market, and we had already had the topping process. In 2007, the Fed pivot was surrounding the topping process, which we may get now if we try to bottom out to the Fed pivot. If the Fed pivot could see a rally and even see S&P move to a new high. My guess is that NASDAQ has already peaked, as I've said, go back up and fill the gap and form a lower high. And I think when you fill that gap at 20,400, I think S&P will be at a new high, and I think it will complete the top in all likelihood. But again, here we had that rally, moved slightly higher. Here we had a lower high and already begun to sell off, and it was a nearly 20% decline leading into pivot. Here, a 20.5% decline followed the Fed pivot, and we ended up dropping almost 58% before all is said and done. So again, Fed pivot doesn't cause the stock market to crash. Is what happens as the stock market starts pricing in the recession. The Fed starts cutting because of signs of recession and recession showing up, and we'll see a rate cutting campaign in the cuts and the recession on the horizon. The cuts to deal with the recession, the stock market will start pricing in the recession. The rate cuts, and this is the problem people will have a hard time understanding. The rate cuts have already been priced into the market. No, 2020, Fed's going to cut and we're going to have the new bull market. But well, 2022, we're not going to have another bear market. We just had one. The people that told us we were never going to have that 2022 was never going to happen. Now they call it a bear market. The bear market's over. We're now going to have this new bull market. 25, 2026, on into 2027. 2020 and 2021 all over again. Fed's not going to drop rates down to nothing because of the risk of inflation. QE is also inflationary. Got to be really careful what they do. They have the 1970s all over again. Just wanted to continue to point this out. Again, this is what I think is going on here, is what we had in 2007. I think we're going back up. I think we're going to make a higher high. I think NASDAQ's already peaked, and then I think you're going to see a very sharp decline of something like 20 or 20.5%, something like that, or 19.5% right after at the peak with the Fed pivot. But we're probably going to see the Fed pivot. The cut here, the first rate cut was September 18th. That's the same date we have right now. Got the peak later in early October, on October 11th. I think we could see something very, very similar to that. Quickly, again, I'll be talking about these divergences forming on these 60-minute charts, possibly another push down and then bottom out. We could have it here. Get a bullish inside day on the daily chart, which is a bullish harami. If we can get it confirmed, then candlesticks mean nothing unless you get confirmation to them. But I still think we can come back and fill the gap and form a divergence on the RSI. We'll see which way it plays out. Regardless of which way it plays out, I'm looking for a bottom to form probably this week, and then a rally going into the Fed pivot, and again moving back towards this 20,400 level or so. But again, showed a couple of gaps now here on NASDAQ, and a sell-off. We were told this wasn't going to happen. We were told this wasn't going to happen. And remember when we got that sharp decline of nearly 11% in 3 days? Oh no, no possible way that's going to happen. We're seeing institutions sell into the rally over and over again. They'll probably push it back up beyond this high, and again to fill the gap that I've been watching at 20,400. We'll complete a top. More about this. We had a rally after that big losing streak we had last week. Last week we had that decline on NASDAQ of 5.89%, the largest decline we've had in about 2 years. S&P had the largest decline in 1 year in that 4-day period. I think we're going to form a bottom, and possibly this week ahead of the Fed pivot or early next week, but I think we're going to form a bottom. I think we're going to get a big rally back up, and I think we could see a bottom this week surrounding the inflation data, maybe bottom with it or bottom ahead of it. I think we're rallying back up here today. I think we're still going to push one more time down. Could be wrong about that. We don't form a divergence, but my guess is we're going to see a divergence develop here on the RSI, and then I think we'll see a bottom and rally back up and take out the high that was made over here on NASDAQ and eventually move towards this 20,400 area. And I think we're going to do that rounding the Fed pivot. The Fed pivot is in a week and a half from right now. Historically, the chart I showed you, we've rallied for about 3.5 weeks with the Fed pivot. I think that we could see something very similar to that. We can get what we had in 2007, where in 2007 we saw S&P move to a new high and top out with the Fed pivot, just right past the Fed pivot. I think you could see something very similar to that. I think NASDAQ has already peaked, as I've said, with this divergence back over here. I think it will get a lower high. This is 20,000, just under 20,700 in the high 20,600 level range, I believe. And I think we'll move beyond 20,400, but I don't think we'll exceed that level. And then I think you'll see a top. And I think that's going to become likely in October if you can bottom out here ahead of the Fed pivot. And I'm just saying this, that looking for a bottom, because historically we've rallied with the Fed pivot. You get a rally, but then we've topped or completed a counter trend in 2000 and then got a much, much bigger sell-off. I think we have a very similar situation to the 2007 top with the S&P 500. So this is what I'm looking at. This is for the NASDAQ. And again, I've told you we have a first leg down here looking for an A, B, C structure to complete the counter trend. But I don't think NASDAQ's going to move to new high, but I do think we'll come very close to this level. And then when we hit this 20,400 area, we'll likely peak right around that time and see the S&P peak, which I believe will be at a new all-time high by then. This is what I think is going on. Well, I think a divergence could develop on those 60-minute charts. We did get a bullish inside day today. We had that big wide range bar there on Friday with the sell-off with the jobs report, and again, a really ugly week last week on NASDAQ. Again, we had dropped prior to that, over a week and a half ago, we had dropped below that 10-period moving average. We couldn't get back above it. And then on the short trading week on Tuesday, saw a big sell-off with NASDAQ, and S&P signals, momentum signals turned bearish at that time. So we have NASDAQ continuing to be bearish below the 10-period. 10's crossed back below the 20, 10 and 20 below the 50. The 50's pointing down. Again, if we don't see the bullish inside day, bullish harami pattern here, give us some type of bottom, again, I think we'll still drop down, form a diversion. So that can take us closer to this 200 period or maybe just slightly beyond it. We'll see what happens. A gap today, and I think if we go back and fill the gap, see those diversions is set up on the RSI in the 60-minute time frame. But this is what I think is going on. Again, I told you back over here on July 11th that I thought that we had peaked right here. I talked about over the weekend the trend lines that we were rallying up into on NASDAQ going into this peak right here. Through all of that, go watch those videos. I showed you those important trend lines. I think NASDAQ has peaked, but we've sold off, we've rebounded back up, and now we're selling off again. If you look at the Magnificent Seven stocks and some of the leadership, again, we're seeing distribution. You're seeing distribution take place, and then they'll run it up and we'll get more distribution and likely complete the topping process. Things are so bullish. Why are we getting distribution? This is the way, a topping process, this is the way it works. I think we're forming double top patterns here, and I think NASDAQ will get a lower high, very similar to what we saw with Bitcoin. I think the S&P will make a higher high. I think when this ABC scenario is done, I think that we'll have a top both with NASDAQ and with the S&P 500. The S&P daily chart, well, we're below the 10 period. We dropped back below the 10 period there on Tuesday of the previous week, our short trading week. Again, got a bullish inside day. Again, could see a bottom surrounding the 200 period on NASDAQ and around the 100 period here on the S&P 500. If the bullish inside days play out, we start seeing signals all begin to turn back to bullish, then maybe we try to carve out a bottom sooner rather than later. But regardless how it unfolds, I'm looking for a bottom to develop this week. If signals start turning back to bullish with the bullish inside day, then maybe that's it. Guess is we're probably going to see the divergences on the 60-minute charts. Required, but again, I think it'll probably end up playing out that way. 4-hour charts, the same thing on futures. It looks like the divergences are still under construction. S&P daily chart, we never did fill this gap. We don't have to fill the gap, okay? We don't have to. My guess is that we're going to. Talked about the channel being reached, long-term channel. We're directly underneath it. It's that red trend line right there, excluding the shadows there. Guesses we're probably going to slam up into that trend line. NASDAQ's already reached the trend line. I think NASDAQ's top. The Dow has hovered there. The jury's still out on the Dow, but I told you I think we have possible top from a week and a half ago. I showed you all those charts over the weekend, but this is why I think that, again, probably still going to move to a little bit higher level on the S&P 500, but NASDAQ won't. And I think S&P and NASDAQ will diverge from one another as they usually do, major turning points, and then I think we're going to see the bear market. And again, eventually, I think we're going back to this 1575 area, or at least to test the, or maybe just beyond the pandemic low here to this midpoint over here somewhere, back to test the pandemic low on the S&P 500. I think we'll see in the next decade. I think you'll see couple bear markets that will likely eventually take the S&P back to this longer term trend line right here. We may not reach this level with the next bear market, but maybe the one after that. We'll see. This is a long-term monthly chart, so keep that in mind. It's not likely we're going to keep going past these trend lines, these long-term monthly trend lines on the Dow, on the NASDAQ, and S&P. Likely that they're going to mark a top. As we saw in 2000, Dow chart we saw at other points came to just up to it here in 2022, but this is really a very important channel on the S&P, and this is again another reason why I believe that we're in a topping process. Still think, I hope you hear what I'm saying, I still think the S&P is not done with the topping process, and I still think it's going to go make a new high. Then I think it will peak. It's going to be surrounding the Fed pivot here. Market will begin to price in recession. Do end up getting confirmation to a bullish inside day, a bullish harami, then maybe we bounce off the 20-week. My guess is we're going to push a little bit lower and form a divergence on the RSI, but it could play out either way. Regardless, we're looking for a rally once we form a bottom, which is what I think is about to happen. Same thing on the S&P 500. Again, we saw a gap higher. I think the gap's probably going to get filled, and we're going to go slightly lower. And then I think we'll get a rebound. Maybe we form a little inverse head and shoulders pattern or something like that. But I think we're going to come down just a little bit lower and then attempt to rebound or, complete a divergence here. Got a little tiny divergence right there at this low, giving us this bounce. I think a larger one will likely develop. It was a bearish divergence that gave us this sell-off of nearly 10%. The bullish divergence here gave us the rebound back up for the lower high so far. This bearish divergence has given us a sell-off. So I think you probably form bullish divergence. We've come back and we filled a couple of these gaps here. My guess is that the S&P probably try to bottom this week. Maybe that's surrounding the CPI or just after the CPI data. I think we're going to try to rally to a new high and clear this level. This is the July peak over here at 56.70 rounding up. I think we'll end up exceeding that level, completing a top, but we'll see if we form a divergence. Now, again, we got a bullish inside day on the daily chart, but candlesticks are meaningless unless we get confirmation of that. We'd have to have a big rally, close above the highs that were made, the highs that of the bars on Friday, confirm the bullish inside day candlesticks. If they're not confirmed, then again, we could still fill these gaps down here. So I'll be watching the RSIs to see what becomes of it. But again, these are still bearish. If they flip back to bullish, then we can start rebounding immediately. If there's more work to be done, then we'll be watching to see if we move to new low and fill the gap. But regardless, again, I think you got a good shot that a bottom is going to try to carve out. Short-term bottom ahead of the Fed pivot. We'll be watching to see if the MACD tries to form a divergence or not. If we just get confirmation of the inside days. And let me just flip back to this. Here it is again on the S&P. We got the same candlestick on NASDAQ. We gapped higher, so we have bullish inside days. If we're going to get confirmation, got to close above the candlesticks from Friday. So again, that's going to validate and then see all of our signals turn back to bullish. If we don't, then again, we could come down lower and then get the turn near the 100 period here or closer to the 200 period on the NASDAQ. So we'll see what happens. Candlestick patterns, though, have to be confirmed. You did get bullish inside days, but they're meaningless unless we get a confirmation and a follow-through. If that's it, then signals will begin to turn back to bullish. See what happens with this gap that we had today. We gapped higher. Do we fill the gap or not? And does this low hold or do we take it out? Regardless, again, I'm looking for a bottom in all likelihood to probably form this week ahead of the Fed pivot going into next week. That's the daily chart again on the S&P 500. NASDAQ's got the same bullish inside day. Same thing though, it's meaningless unless you get confirmation. So if we get a big rally tomorrow, then maybe we confirm these patterns, bullish inside days. But again, I think you got a better shot of the diversions on the RSI there on the 60-minute chart. We'll see which way it plays out. Right now, signals remain bearish. We'll see if they revert back to bullish immediately with the bullish inside day, or if there's more work to be done and we go back and test Friday's low there and then see signals try to turn back to bullish. We'll see what happens. Again, signals are still bearish here in the 4-hour time frame for the S&P and momentum line and the cloud. We're still seeing the bearish signal here. I think that, again, if we go back and fill the gap, I think we'll see bottom develop. If we begin to get a big rally and we see the signals flip immediately, then you've got your inside day in the daily time frame likely being confirmed. But the signals have done a good job in marking the turns back and forth. Again, I'll be watching to see if we get another turn ahead of the Fed pivot that, again, maybe gives us a rally to a new high on the S&P. My guess is that's probably going to be the case. When you two scenarios, one, you get a sell-off ahead, Fed pivot, and a bounce with it. It dropped over 19.5%. The other one is that we rallied a new high with it, and then we sold off the 20.5% after. So again, I think latter is likely going to be the case, where we get a rally to new highs. S&P 500. Allows the NASDAQ to go fill the gap at 20,400. Then I think we see a peak. So going to be looking for a bottoming process to complete at some point this week, whether sooner or later. Really depends on that bullish inside day we got today on the S&P 500. Is it going to be validated or not? Again, candlesticks are meaningless unless they're confirmed. So we'll see what happens with that bullish inside day pattern. Now, same thing with NASDAQ. We got a rally today, big rally. It hasn't changed the signals here. This is the 4-hour time frame of NASDAQ. Same thing here. Again, gapping higher. We'll see if we go back and test the lows. Once NASDAQ does form a bottom, again, I think it's coming back up here to this 20,400 area. I just want to show you these 4-hour charts of futures. Again, similar to the 60-minute charts of S&P and NASDAQ, the cash. Here we've seen this turn back up, 4-hour time frame. Again, I think we're likely going to see a divergence develop on the awesome oscillator, similar to what I'm looking for on the RSI on those 60-minute charts. This is a NASDAQ 4-hour chart here, and here's the E-mini futures of the S&P 500. No guarantee that we have to form, we don't have to form a divergence. We did get bullish inside days. So I'll be watching. Which way does it play out? Does the bullish inside day start flipping all the signals back to bullish? Or do we go down and form some divergences and then see it? But my guess is we're going to see a short-term bottom develop, again, likely going into the Fed pivot. I think with the Fed pivot, we'll get a rally. It will last a couple of weeks, complete the topping process. And again, historically, that's the way it's played out. Watching to see, try to carve out a bottom, whether a bullish inside day on the daily chart, whether a divergence forms, or all is said and done on the hourly. I think a bottom will likely develop, see a rally surrounding the Fed pivot. Just a 4-hour chart of the S&P futures. So again, just looking at these awesome oscillators, watching to see if we end up developing divergences or not, or do we just confirm those bullish inside days? I'll be watching to see which way it unfolds. Wanted to share both of those scenarios with you because we did get bullish inside days, and we still have the possibility of divergences on the 4-hour charts here and the 60-minute charts with the S&P and NASDAQ cash. Also wanted to share this with you. I've been talking about this quite a bit over the last few weeks. Again, I told you that I'm looking for green bars to show up on the awesome oscillator in the weekly time frame. Well, we're starting it this week. Now, signals are still bearish. We're still below the 10-week moving average, but we're trying to bounce off the 20. So whether we go a little bit lower and try to form a bottom, or whether we try to form a bottom with the bullish inside day, we'll see which way it plays out. But this is suggesting to me that, again, we're likely going to form a divergence on the S&P 500 before all is said and done. We did have a divergence right here that gave us this 10% sell-off. Again, it's likely that we're going to get another reference point of a divergence here, and complete the topping process. But this is what I told you I was watching for. It is now showing up. We'll see if it completes there. It did try to show up last week, but it went away. Right at the beginning of the week, we had that big sell-off, and it was there briefly, and then it went away. We sold off all last week with that short trading week. And green bar is showing up here. So again, I think the divergence, I think that is suggesting S&P is still going to go make a higher high as I've been talking about. Also talked about the daily chart where we have a reversal of conditions. We saw the momentum shift on Tuesday of last week, the beginning of our short trading week. It still remains bearish. We're still below the 10 period here on the S&P. To see these signals turn back to bullish if we're going to try to go make a new high, if we're going to try to rally with the Fed pivot, massive Fed pivot rally. If we don't, if my signals remain bearish, then the risk is that we keep going down. And historically, we've tried to rally with the Fed pivot. So again, my guess is we're going to try to we'll continue that, and we'll try to form some type of bottom. We are becoming oversold on the stochastic. MACD is coming back to the center line. So again, we'll be watching to see if we try to bottom out here, or maybe our bullish inside day validates Friday's low as a bottom. Like I said, the candlesticks would have to confirm that. We'd have to be able to get back above the 50 period and again start flipping and reverting things all back to bullish. Right now, signals are bearish. My guess is we're probably going to form a bottom. Why do I think that? Historically, that's what we've done surrounding a Fed pivot. NASDAQ's closer to that 200 period. S&P's close to the 100 period. Again, a bullish inside day. If it doesn't play out, again, watch the 200 period. We're still seeing momentum into the negative region here with the awesome oscillator. But again, we're becoming oversold, and guess is that we're going to see things revert back to bullish. But you have to get back above the 10 period, the red line. Again, we dropped below that a week and a half ago. We dropped below the 10 period. It acted as resistance. And then again, last week we had the bigger sell-off. We dropped 5.89%. P lost 4.25%. I think you're going to try to bottom, go back up and fill the gap at 20,400, and then I think you will see the NASDAQ complete the topping process. So again, wouldn't be surprised to see bottom develop this week, and then maybe to turn some signals back to bullish. And same thing with the S&P. The signals remain bearish. Risk is that they don't turn back to bullish. If they don't, we're at risk of a bigger drop going into the Fed pivot or surrounding the Fed pivot. My guess is historically try to rally with it in some type of bottom with the Fed pivot. So historically, it's been the case. I think it will likely be the same here. NASDAQ daily chart here, and thing for the NASDAQ weekly chart. We're starting the week off getting the green bar. We'll see if we end the week that way, but again, while S&P will probably form a divergence, NASDAQ will probably validate a lower high. Now, if I'm wrong about this being the top over here, you've got the rising trend line just above that level. Guess is, though, that we have the top in, that we'll likely see NASDAQ and S&P diverge from one another, but I've talked about that trend line on the weekly and the longer term trend line on the monthly chart, and we've slammed into two major trend lines. Go watch the weekend video. At the end of this video, I talked about all of these trend lines over the weekend. Getting the green bar, causing me to believe that we're going to see some type of rebound rally back up, and my guess is we'll go close that gap at 20,400.